take it across to Nooresh, find out what on the charts his reading has been. Nooresh, hi, good morning. Excellent week. Consolidation and that again move up on Friday as well. What's in store for us this week?
So the best way to play this momentum has been to continue to ride it on, and overbought conditions can continue much higher is what the general assumption is whenever a trend starts. So we've touched the first target zone of 21,200, 21,500, and now a little bit of a pause in the index could be normal. So expecting some bit of a sideways consolidation wherein we don't break any levels, but we remain at the same place and stock specific action continues. Same is the case with the Bank Nifty as well. But relatively, Bank Nifty has a few more legs left in terms of momentum because we are seeing fresh breakouts happen in some of the large banking names. So we are seeing a good breakout happen in the SBI. You have a IndusInd Bank which is breaking out. We are yet to see a similar breakout in HDFC Kotak Bank, but the larger names are breaking out and holding on. So Bank Nifty could continue to outperform. The trend is still up. And the best way to right now ride is to keep a trading stop loss.
That's the interesting thing, right, Nikunj, in the market. While banks continue strong, you are seeing participation within banks from the laggards. And then the most laggard of the sector, IT, is now making a comeback across the board.
Yeah, unexpected. I shall tell you why. Because the general assumption is that if US slows down in the short term, they will have to take a hit in terms of their visibility. Now, the reason why IT is moving higher is because it did not participate. And these stocks are not at an all-time high. So the headroom for markets now to buy something which has not participated or something where in a sense there is going to be this entire catch-up effect, I think is clearly visible. Now, what do you look at IT? Well, there are two ways to look at IT. That's price to PE, not PB. Book stocks cannot trade at a price to book of 26 times. Where is IT trading? If one really looks at the IT stocks right now, well, IT stocks right now are not trading at levels which are below their historical average. They are just in and around there. Second, the AI threat I think is real. See, whatever is happening in US markets, I think if the economy slows down in the near term, first there would be more, there would be more contraction, and then it's only in the second half of 2025 the repair will actually start. Surprisingly, IT Aisha this year has done much better than banks. Nobody anticipated at the beginning of the year that despite guidance cut, management commentary, delay in order books, no hiring, issue in terms of where the AI is going to be changing the business model, IT has done much better than the banks. And the simple here is that this is a complete contra trade which people are buying thinking that this year the turn in a sense IT, the downturn in the sense for IT would be over. So I don't think from a risk reward ratio standpoint there is going to be big money to be made in IT here in large cap IT services. Small companies, you got to pick your spots there. I mean, there are so many niche players, those companies are doing such individual things which are so strikingly different. That's a very different and a very, separate conversation. But in general, maybe I've got it wrong, or maybe that's the way I think. I think IT in a sense right now does not give you that kind of a launch pad for a great return for 2024.
Kunal, what's your take? Nifty Bank, Nifty IT, what would you pick?
Because you've been recommending a lot of large cap IT.
Yeah, so I'll probably go with large cap IT stocks even at current levels because, so adding to the point where Nikunj was mentioning, there are a lot of large cap IT stocks which have been huge underperformers. Now, when I look at the charts specifically for the likes of Wipro, I think that stock has been a rank underperformer both, whether it was 2020 rally for the stock or whether it's a point where the stock has corrected from the 2021-22 top for itself. So I would probably expect this, few large cap stocks to make a comeback for themselves, at least try and cover up the underperformance or the stark underperformance. And on the other hand, there are also a lot of indicators on the indices, both on the Nifty and the Bank Nifty, which are now getting into an extreme overbought territory on the daily chart. So that could also result into a pause on the benchmark indices, and the other sectors which have been underperforming, they could probably be seeing some good momentum.
All right.